Some payments feel like income, but the tax law treats them as special exclusions. On the EA exam, the trick is spotting the label. Combat zone pay, difficulty of care, Medicaid waiver pay, workers' comp, VA disability, and life insurance proceeds. Each has its own rule and its own common trap. Your job is to decide: fully excluded, partially taxable, or taxable but reported differently. Combat zone pay is the cleanest exclusion. If an enlisted service member serves in a combat zone for even 1 day in a month, that entire month's combat pay is excluded. That month rule is heavily tested. Officers can exclude too, but only up to a limit tied to the highest enlisted pay plus hostile fire or imminent danger pay. Medicaid waiver payments, also called difficulty of care payments, can be excluded when you provide care in your home and the care recipient lives in the same home. Same residence is the key fact. If the caregiver maintains a separate home and just works there, the payments are taxable. On the exam, they'll give you facts about where the person sleeps and lives. Use them. Reporting is where people get burned. There's now a W-2 Box 12 Code 2 used for Medicaid waiver payments excluded from income. But sometimes you'll see a Form 1099 NEC anyway. A common approach is to report the 1099 NEC amount on Schedule C, then back it out as an offsetting excludable amount, so the IRS matching works while the income stays excluded. Disability-related payments depend on why you're being paid and who paid the premiums. Workers' compensation for an on-the-job injury is not taxable, period. Disability insurance benefits are taxable if the employer paid the premiums, and not taxable if you paid premiums with after-tax dollars. If premiums were split, the benefits are split the same way. That proportional rule is a favorite exam move. Disability retirement is different from disability insurance. If you retire on disability before minimum retirement age, those payments are treated like wages until you hit retirement age. After that, they're treated like pension income. Translation: still taxable, but the character changes. On the EA exam, watch for before minimum retirement age. That phrase is your trigger. 2 more common exclusions. VA disability compensation is not taxable, and often there's no W-2 or 1099 to report. Life insurance proceeds paid because of death are generally not taxable to the beneficiary. The catch is interest. If the insurer holds the money and pays interest over time, that interest portion is taxable. So proceeds excluded, interest taxable. Darius is an ordained minister with the United Episcopal Church, and he receives various types of income from the church. Which type of income would be subject to self-employment tax for Darius? Options include a minister's housing allowance, mileage reimbursements under an accountable plan, group medical insurance benefits, or none of the above. Think about it. The correct answer is the minister's housing allowance. It's usually excluded from income tax, but it's still included in net earnings from self-employment for SE tax purposes, unless the minister has a valid exemption. The tempting wrong choice is none, because people remember it's excluded, just not from self-employment tax. Marisol cares for her disabled son in her home and receives qualified Medicaid waiver payments totaling $17,000. She got a Form 1099 NEC reporting the payments as non-employee compensation, and she has no other job. How should she report these amounts on her tax return? Options include other income, Schedule C, Schedule E, or a Schedule C method that offsets the excludable amount. Think about it. The correct answer is the Schedule C approach that offsets the excludable amount. Qualified Medicaid waiver payments that meet the difficulty of care rules are excluded from gross income, but the 1099 NEC can cause IRS matching issues. So you show the income on Schedule C, then back it out as an offsetting excludable amount to land at zero taxable income from it. A tempting wrong answer is other income, but that doesn't handle the 1099 NEC matching as cleanly.